And just talking about the space, I think Tamna and me were discussing this. NSE in the unlisted space is currently going at 1580, 1600. So just to quantify that for you, that is talking about a 4 lakh crore market cap on a company that is still not even listed in the exchanges, right? So the euphoria is there, and I think anybody who can get their hands on some of these unlisted names like NSE or capital market plays in that sense isn't missing a single opportunity of doing so. So yeah, that becomes a sweet spot. Metals remain constructive. CDMO, I think we thought about this yesterday, right? It's an opportunity to buy beyond the Biosecure Act. I think CDMO, was it early October when Motilal, I believe, did a big lump sum deal on, I think, DVs, if I'm not mistaken. Since then, that sector has been on an upswing for everything that it's worth. So CDMO from October, of course, now we talk about the Biosecure Act a lot more actively, but the buying has emerged in this sector in the recent few years, and more so in the recent few months.
One more, if I would add, would be your entire consumption space, which took a hammering yesterday. And I think some of them may be in oversold territory. Godrej Consumer was about 8-9% down. HUL, Tata Consumer, all of them taking a knock. Now, I know this is not a space that moves too much, but with the kind of hit that we finally saw, it might be a little overdone. The kind of concerns that we have seen.
You know, Tamanna, on that note, and I've been tracking ITC quite closely, and I remember Gautam Shah always calls this a Rahul Dravid, because he said they may not run up, they may be boring, but they also don't fall. This was when the stock was at 530, 540. We're now at 465 on ITC. So while I do take your point, and there are a number of days that I keep thinking, you know, a bust, right? Exactly what we thought about the markets. But for some reason, the space is just finding it so hard to find low-level buying. And I think if you're in transitionally to make a quick buck, opportunities are so much more. So you still have fertilizers come back, you've got defense that's coming back, capital market, like both of you said. But yeah, we can hope that consumption should recover, because most mutual fund portfolios also have significant holding to some of these counters. So along with banks, stocks like HUL and ITC do show up in a lot of large cap oriented or flexi cap funds at this stage. So you want to hope that this space sort of finds a base and starts recovering soon. I have a few stocks that we should be tracking, and of course, and I'll hand over to Neeraj and Tamanna. Metropolis Healthcare becomes one that I'd like to track. They have acquired Delhi-based Core Diagnostics for 246 crores. It's a pretty significant acquisition for the company. It's also strategic because it will enhance their capabilities in advanced cancer testing while strengthening its presence in North and East India. The good thing is the deal is expected to be concluded in all of 60 days. So by calendar year 2025, by February, this deal should be done with and becomes revenue accretive from Metropolis from the get-go. Well, along with that, Bharat Electronics, order wins are usually my favorite, right? So you've got BEL that has bagged significant orders, and this is not small. 634 crores worth of orders have come in. This includes maintenance of the Akash missile system, telescopic sights for guns, communication equipment, jammers, test stations, spares and services. So it's a big order, and it's probably recurring revenue in some ways because it's a maintenance order from what we understand. So BEL becomes an important one to track this morning. I'll mention Torrent Power because they had a very successful QIP to the tune of 3,500 crores, was heavily oversubscribed, 4 times oversubscription on Torrent Power. That has now been concluded, and this came in with very, very solid hands investing in this QIP. So you had SBI Capital Group, SBI Pension, Kotak Mutual Fund, Nippon Mutual Fund, Norges Bank and Amundi that came into Torrent Power. So given the kind of marquee investors in subscribing to this QIP, I think Torrent Power could see a move up, BEL goes up, and I think Metropolis also should be up.
Yeah, acquisition news has been the big driver last few sessions as well. So that's important. And if we can just get my stocks up. We'll start with metals. Metal stocks in focus this morning, and a thumbs up for them. And we mentioned it briefly, the way that China has come up and talked about, you know, how they want to change things around is a big up move. So China has shifted its stance on monetary policy for the first time in 14 years. Chinese Politburo announced a moderately loose policy next year. Chinese action is, of course, ahead of the Trump presidency and a possible tariff war, and China's move to boost growth positive for steel demand. That's why I expect an up move on some of these metal counters. Look at a Tata Steel, JSW, Hindalco, Nalco, Vedanta, of course, SAIL, the whole lot of them that you should see. The other pack that we should look at this morning is insurance. So November data was out. The worst of it, I would say, for LIC. Thumbs down. That's why on an LIC, they've posted a steep decline of 12.4% year on year. They're continuously losing market share to private insurers. Actually, that's a bit of a problem with SBI Life as well. So who is gaining in this pack? Look at an ICICI Pru, HDFC Life. That's why I'm giving them a thumbs up this morning. In fact, Nuvama has a top pick on HDFC Life with a target price of 830 because their individual APE growth of mere 2.7% and total APE growth of 5.2% year on year. In fact, ICICI Pru is also a hold for Nuvama with a target price of 740 rupees. Their total APE growth is an impressive 58.4%. So I think ICICI Pru is also one that you should watch out for. Max Life has also done fairly well this month with a total APE growth of 24.3% year on year and individual growth of 24.8%. SBI Life relatively is an underperformer versus private insurance and market share has also fallen to 16% by about 47 basis points. So those are some of the pack. Bajaj Life is another one. Nuvama has a hold on it. So look at the insurance space. LIC worst performer, ICICI Pru, HDFC Life on top of the pack. Bharat Forge, on the other hand, a thumbs up this morning. Their QIP has gone through. They approved an allocation of 1.25 crore shares via the QIP at a price of 1,320 per share. Allocation of 1.25 crore shares is at a slight discount, 0.27% discount, and it aggregates to about 1650 crores. The issue price now, as I said, has been set at 1320. So the reasons they're raising this money is for repayment and prepayment of certain outstanding borrowings by subsidiaries and the proposed acquisition of AAM India Manufacturing that they announced in October. But overall, the mood has been quite positive on Bharat Forge, so expect it to be a bit of a thumbs up today as well. So Bharat Forge, another one on my list.
Okay, very quickly, my three stocks. Syngene is the first one. So Biocon, the stock was down 5.5 yesterday. It didn't recover at all, contrary to some of the others. And now we know the reason why. Biocon is going to sell up to 660 crores worth of shares in a block deal. The floor price is at 825, which is about a 4.9% discount to closing price. But remember, that's the floor price. This is not the actual price at which the block might be done. So the point being, this sale now takes Biocon's stake in Syngene to about 51. Don't think there is more coming in. Therefore, that's a bit of a clean out trade. And if consumed well, could actually mean that Syngene could do well from the lows if it does dip. So keep that in mind when you're trading Syngene. Speaking of pharma, Divi's and Citi's note on Divi's is interesting. I'm losing two brokerage notes now. Citi's come with a note on Divi's with a buy target and a target price of 6850. They say that independent of the Biosecure Act, biopharma companies will continue to look for diversification and will keep adding additional partners and suppliers. Any sharp correction in the stock price may be an enhanced buying opportunity. So do watch out for this one. And very quickly, before we get into Mr. R. Gandhi, the third one on my radar is Swiggy. Now, CLSA has come out with a note on Swiggy with an outperform rating. The current price is 536. Their target price is 708, which is a 32% upside potential according to CLSA. And they say that, I mean, innovative business, etc. There's a gap in the price, accelerating growth, so on and so forth. Multiple reasons. We'll cover that in detail, but keep an eye out on Swiggy. Might be an interesting one in the session today.